let's expand our markets, this conversation. Bring in Omar Aguilar. He's Chief Investment Officer of Equities and Multi-Asset Strategies at Charles Schwab Investment Management. And our senior markets commentator, Mike Santoli, and our guest host, Paul Hickey of Bespoke Investment Group. What do you think, Omar? Where were you? When you were you like me? It's like, oh, that's why. Or do you know for sure what you know for sure what the right?
Well, I think that the biggest challenge here, Joe, is that the Fed's credibility in terms of looking at what they call data-dependent decisions. It sort of has gone into this descent. So I can only imagine then going into a meeting saying like, all right, this is what the data tells us. This is where we are in the economy, but this is what the market says. And all of a sudden, the Fed, for the first time, it actually seems to be going towards the market as opposed to actually going towards the data. And I think that in itself, you can explain both ways. Yes, you want to be preemptive of what the data will come, and therefore they're trying to anticipate that bad data that will come because of the pressures they see overseas. So you see that component of trying to prevent the deflationary import coming to the U.S., and therefore they're trying to be proactive to try to prevent that. But the problem of that is, we have been hearing these dot plots on these data dependence for just, over a decade now. So I think that's the biggest, challenge in terms of going forward, because everybody's now thinking about Fed futures actually is more indicative of what is going to happen going forward than anything the Feds may say.
Santoli, if it's a global economy now, you can pick your data points, and it's basically a Rorschach, isn't it? I mean, where you look, what you look at, what you see versus what someone else sees.
Right, and I think it's to your point, it's the nature of being at this kind of ambiguous moment in a cycle when you've had many cycles within this 10-year cycle. So you don't know if this is just a lull and we're coming out of it. What you can do is observe, though, the way that global interest rates are and where they sit and where the Fed-controlled rates rest relative to those. And that's been a little bit of the outlier. And I think it's one argument that the Fed has not really embraced, is that we're just making this adjustment to kind of tack toward where the world is in terms of deflationary expectations or central bank policy. So, I mean, it's interesting because the plurality on the Fed, if that's what it was, that wanted this quarter-point cut, I think they're kind of willing to see if they get lucky and the economy comes back and the market seems to be saying, okay, maybe we can live with that for a little while.
You think maybe they're feeling like they pulled this one off and we wait and see for the next one? And we had pushback from people today saying, look, they left open. They didn't give pushback on the idea that there could be another rate cut coming.
And I think the market's takeaway from that was this is probably going to be one unless things get a lot better.
I kind of took the opposite. Like, we'll just wait and see what happens. And the numbers are pretty good right now.
I think they want to pivot back to a data dependence thing, which Omar was sort of arguing for. I don't know that they're able to do that quite yet.
Because of what's happening around the globe?
Right. The thing is that, and I think they feel the downside risk of getting it wrong by being too aggressive to the downside is very limited.
Yeah.
With inflation the way it is, low it is. The problem I have with Mike's argument, which is not his argument, it's the argument out there, is that I don't know that if we go down, that they pivot down further, that we can ever really catch up with that.
Right.
I mean, as I've said several times, if President Trump wants Europe's interest rates, he probably has to take Europe's economy. And I don't know that he wants that. I don't know that there's a reason why European rates are negative. There's a reason why our rates are positive. With the question of should they be quite so positive relative to these others. But you could imagine if we go down further, Europe goes down further, all of a sudden we're racing to the bottom.
Yeah.
Is there too much communication, though? I mean, in the latest dot plots Wednesday, I mean, what is it, 5 or officials see rates, Fed funds 25 basis points higher by the end of the year?
5 do, yes.
Yes, I mean, so the dots just create so much uncertainty and we move from, late last year we were expecting hikes, now we're expecting cuts. I mean, it's just a little bit of...
I'm old school about this in the sense that I remember when the thing we most wanted to know was the Fed's forecast for the funds rate. So I'm not going to look this gift horse in the mouth and say I'm too confused by it. Don't give me the information that we once thought was the most critical piece of information to have. We'll deal with it. We'll deal with it.
But it is true that 1 year ago, we had 3 further hikes baked in.
Right.
Mm-hmm.
Now you have, probably another cut.
3 cuts.
So the point being that it can change, and it's all over the place. And by the way, the S&P, had that top a year ago, and we're up 2.5% from